What up? Welcome to the live. Welcome to the live. It's my first time doing this thing here on YouTube, so I've got, you know, don't laugh when I make some mistake here. Maybe pressing wrong buttons and all that. Don't laugh, don't laugh, don't laugh. It's my first time doing this thing of live. Even on TikTok, it's been a very long time. Um, conducting conducting like lives and all that. So yeah, um, welcome, welcome guys. So I'm open for questions, concerns, or anything like that before I can even bring out what I want to share with you today and all that. So this is some kind of Q&As with post-market analysis and time to trade. I'm also gonna get into that part of when exactly it is a good time or the best time to trade, to be looking at the market for specific instruments, because that is the biggest mistake. That is the biggest mistake most people are making. You find people be trading all day, looking at the market all day, only to find out that the instrument that they are looking at is only to find out that the instrument that they are looking at, that they want to take a trade on, it starts to be active a bit later in the day. For example, you find someone be looking at to trade the USD early, maybe as early as around 12 South African time. You'll be asking yourself, what's going on? What is it? Why is he looking at the market early as that? Because you shouldn't be looking at the market early as that if you're looking at instruments like that. So we're still gonna get into that part as to what are we looking at, or when to trade exactly, and also maybe looking at what is going on today. Now, because I think even tomorrow around this time, I will be doing a weekly post-market analysis, to be looking at exactly what is going on during the week. So now today, if we were to do the post-market analysis, we'll be looking at it for today. We'll be looking at it for today as to what is going on, what were the possible opportunities, and what was the things that you should be very, very, very careful of, or that you're supposed to be very, 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 very careful of, because the market can be difficult and dangerous sometimes if you were to be looking at it almost every time. So yeah, that's what I will be looking at today. So you can come up with any of your questions if you have any of your questions, concerns, or any of those things. um I'm open. I'm open for all of those things. I'm open for all of those things. There, I'm open for the questions. Anyone who is brave, who will help us to kickstart our life by a question, because ain't no point of starting a conversation only to find out that people have their own questions, they've got their own conversation to have. So yeah, let me hear from you first as to what is it that you would want us to get into first, and then before I can bring up my my conversation. All right, so since this thing, it is my first time doing it, I don't know, I can't tell if you can hear me well, or maybe I'm cracking, like the sound is not good and all that. Anyone who is brave to let me know if the sound is good and you can see everything clearly. Right now I'm looking at the charts right now, so let me know what are you seeing. Are you seeing what I'm seeing, the charts and all that, before we can continue. Ain't no point of moving forward while people can't see or can't hear what's going on. What am I trying to say? Sorry. All right. Mr. Finos want to look at the NAS 100. Um, Now you want me to to reveal our secret here in public. You want us to reveal our secrets in public? Yeah. Um, but yeah, okay. No, it's fine. I'm not gonna get into much of the details, but I'm gonna roam around in terms of the market condition, in terms of the direction of the markets and all that. I'm not gonna get into much more of the details because um, I will be revealing our secrets here uh, in public. But with all of that, let's get into the next 100 to see what we had right here. But firstly, we need to start from the USDT to do the market analysis of the USDT before we can move maybe on to the next one to the next 100, because I want you to see this thing. So now firstly, the next 100 in USDT, most of the time they're moving in the same direction, especially at the right time. At the right time means that's from our time in the 15th date, because that is when we start to look for opportunities in the market. You know, if you want to trade the next 100 in USDT successfully with no issues, starts to, you've got to start to look at the market for these instruments as from 15th date, because that is when number one, they start to be decisive. That is when they start to be active, and they don't waste time they don't waste time in terms of distributing the movements. You will find a lot of people trying to trade these instruments, like maybe here, that's around this time. When you're looking at it from there, the market from there is not yet decisive, not yet clear. It's simply just floating around, not doing much. Like, yeah, not doing much. So that's why it is so important to start to look for the market as from 15 to 80, easy as that. Because even at first place, when we started this thing of trading, we wanted freedom. We wanted freedom as to know exactly the specific time to trade, like 5 hours, 4 hours, looking at the market, and then after that you're done. Continue with the rest of the day. Take care of other businesses and all other stuff that you're doing, and then you're out. That's what we started. That's why we started this thing of trading at first place. So that's why you've got to have your timing element in place. So time to start to look for NQ, USDT, BTC USD is from 15 to 18 going forward. Now, what I usually use to explain, or what I follow, what I trade in the market most of the time, you've seen some of my videos explaining this thing of identifying the direction of the market. What I do, I like to look at the market as from 9 and 15. That is the time where I look at the market. So what am I doing right here? Because the game doesn't start yet 15:30. Because I know someone will be saying, oh, that's what it means. I've got to look at the market as from 15:30 just to check variations of what the market does from there. No, what you do is that you need to get the direction of the market first before we can get to 15:30, where we are expecting to take trades. There. Now, what are we looking at now between 9 and 15? I've explained this thing a lot on my videos. If you've seen them, or if you um uh, uh, um yeah, if you've seen them, if you watch them, yeah. So now there are two ways, or two things that I'm looking for right here. Two things that I'm looking for right here, between 9 and 15. I'm looking for if the market is going to give me a continuation or the reversal. Continuation or the reversal. That's what is going to tell me exactly what's going on. What should I be looking for in the market? Now, in this case, what we had the market that's simply open and pick one direction. So from there, that means I'm looking to what? I'm looking to continue to the same direction at the right time. As from 16 to 80 going forward, I want to see the market moving in what? All the way to the up. That's what I want to find, or that's what I want to see right there in this case. And then what I want to see, two things at 15:30, because this is where most people are getting it wrong. People think that since I'm saying as from 1530 I want to buy this instrument in line with what market has been doing between 9 and 15, you find people wanting to, the minute the market open here at 1530, they will simply want to rise with the market. Big mistake. Don't do that. Instead, there are two variations that the market will do as from 1530. 1530, the market will either open, drop, and then you will expect to buy that instrument, or you're going to see the market rise, and then your aim is to sell that instrument from that. Those are two things that you're expecting to do. Or those are two things that you're going to do at the right time as from 1530. You know. Now, with this information, you don't simply just go in the market and only wait at 1530 and say whenever the market open drop, you're expecting to buy, and when the market open rise, you're expecting to sell. That's not how things work. Your aim is going to be consistent in profits, because once you do that, the market will always play tricks on you. So what's so important, get the direction first right here. Then when you've gotten the direction, you know exactly where the market is going. Then as now, since we said the market, when the market opened and pick one direction, we're expecting to continue to the same direction. So if that's the case, what you're going to see, we now know that the market will have to open, drop before we can rise, which is the same thing that's happened right here. We saw the market. Okay, now that's too messy. So said we had the market that opened and pick one direction. That means at the right time we want to buy this instrument. But we said we can't just buy at 1530 open and continue. No. Two variations. We have to see the market open, drop before we can rise with the market. Now, this is exactly what the market did. The market opened here at 1530, and then after that dropped all the way to the downside, which is exactly where the 1530 lost momentum at, and then we had an opportunity to buy. Easy as that. That's how you'll be doing this thing. Now, so now with this, it won't always be a case of 1530 taking you into a trade. It won't always be a case of 1530, because 1530 can have low volume, not having enough volume or momentum to push us through or to our trade opportunity, to our entry place. Sometimes the market can simply just open at 1530, drop a bit, without having, for example, let's say an entry point is somewhere there. So the 1530 open, drop, and play somewhere there. That will mean that now we will need to have more and more of the candlesticks that will support this to drop all the way to the downside, so that it can get away to enter. So right here, 1530 was able to throw a big candlestick, which is the one that attacked us into a trade right here to the upside. But sometimes it won't always be a case of the big candlestick like this. Sometimes it will open and be shallow. Kept on playing like that. Therefore, in those scenarios like that, we will need to see more candlesticks dropping into our entry point so that you can take a trade, which is exactly what happened right here. But the part that is so important, that you need to know, it is to be able to read the market between 9 and 15. With this way, you don't need to go over last week, last month, and last year to understand exactly what is going on in the market. All you have to do it is to see, or to use the resources that you have for the current day. The resources that you have for the current day, and then you are good to go. Because trying to use the stuff for last week, last month, and all that, meaning like an old price action, you don't know exactly, what was it that fueled or that made markets to behave or react in that way in those days. So that is why you will need a fresh market in order for you to understand exactly what is going on today. So that's why your aim, it is to look at the market on the current day. If you were to go back, maybe to try and get the idea of what is going on in the market, at least go back for about 1 day or 2 days only. 1 day or 2 days only. Don't try to go all the way back trying to go back for about last week, last month, and last year, and all that. Especially if you're a day trader, that's the biggest mistake most people make. Some other people don't know exactly what type of traders are they. If you're a day trader, the idea it is to take few pips from the market in and out, so then you're done. Take few pips in and out, and then you're done. Not the idea of trying to hold position for so long, unless the market is slow. Then if the market is low, then there's nothing that you can do with the market from there. But if the market is fast and then you still want to hold, then most likely the market will reverse against you. The market will reverse against you and take you out. Right. So that's exactly what is happening in the market. Now there are some people who like to trade other instruments without the ones that I specialize on, say USD, XAU US, no, NQ, NAS 100, USD, and BTC USD. So other people don't like to trade those instruments now, but they also wanna know the timing element when to trade their instruments, like the XAU USD, which is the gold spot, the GBP USD, the Euro USD, USD CAD, Euro CAD, USD CHF, USD JPY, all those instruments, when to trade them and all that. Now let's get into that part. So I'm gonna show you exactly what's going on. So this was just a snippet for you to look at and understand about your market. What is it that I'm looking for, like on a daily basis, and all that from there. Now let's move to another part, another segment, because I said got no, not this one. Oh, sorry, this is what I want to see. Right here, this is the timing element. Right here, understanding when to trade, when to trade all instruments out there. I think this is a well-defined and a well-simplified timing element I've ever seen. I think this is a well-defined. Even I myself, when I'm looking at some, like, yeah, this is the well-defined timing element, standard template I've ever seen as well. Right here, in the way of like looking at, because I've seen most people like have been talking about XAU USD gold spots, that they wanna know the trading models of those instruments, about XAU USD and all other instruments of that nature. Now let's get into it, because like I've been more about the indices, US indices. I've been more about US indices. So now I want us to talk about the currency pairs and spot metals. Okay. Why this thing now? Okay. Or I no. I want this and the epic pen. Epic. Okay, now let me do this. Put it here, and then let me fetch it from this side. Right now. Alright. No, I wanted to explain this thing like with an epic pen and also to try and write something here on the chat, but now I can't. Okay, now what we have right here is the timing element for all instruments out there. When to trade exactly. Like instruments specifics. Like the specifics of the timing element, in line with the instruments that you should be looking at the time there. Okay, so what we have right here is we've got the Tokyo, London session, and the New York Stock Exchange. Now, when you are interested in trading the XAU USD, you like the gold spot, GBP USD, Euro CAD USD JPY, USD CHF USD CAD. Your window of trading should start from 1 going forward. But 1 is like a transition. So there will be too much noise there around 1. There will be a transition between the LTS to post LTS. Then from there, you're going to see too much chaos, in that transition. So you've got to wait for quite some time to let the market do whatever it wants to do. And then after that, as from 2:30, when you're trading these ones, the GBP USD, Euro USD, XAU USD, start to look at these instruments as from 2:30 going forward. Do not try to look at these ones as early as 9, 10, 11, 12, 1. No, it's not safe. It is not safe to try and approach the market from there. Instead, try by all means to start to look at these instruments as from 2:30 going forward. 2:30 going forward. If you're in South Africa, so the timing element for South Africa, it is UTC plus 2. It's UTC plus 2. So yeah, if you're in South Africa, just type in UTC plus 2, convert it into your country, then you will see. Then you will get the idea of the timing element. Why I'm saying 2:30. So to make it simple, 2:30 is when most of the US news announcement are being announced. It's news embargo. It's news embargo list of the United States. That's when you'll find non-farm payroll being announced. That is when these instruments, you will start to look at them. GBP USD, Euro USD, XAU USD, and all that. Easy as that. That's how you will be looking at these instruments as from there. And then New York Stock Exchange, 15:30 going forward, it's now 100 USD and BTC USD. Then you will never go wrong from them, and then you will never go wrong from there when you're trading these type of instruments from there. So yeah, try by all means to look at the market as per timing element. Look at instruments as per their timing element, not just to enter into the market when you feel like, not when you feel like entering into the market, or when you feel like it is good to look at the market. The market is not about your availability, because someone who builds their timing element based on their availability. You find someone who is busy maybe during like the whole day or during the day, and then it's around 6 p.m. and then that's when they get time to look at the market, and then they will label that time as their time to trade or their trading time. Big mistake. You've got to have the timing element based on the market or based on the instrument that you are looking at. Based on the instrument that you are looking at. So for those people who are still joining in this live, the questions are open. Do not feel like you are disturbing me and all that. You will not be disturbing me. Instead, you will be asking a question. A question must be asked, and then questions must be answered. So yeah, you will be doing that. So you can ask any question, any consent that you might be having and all that, any type of instrument that you'll want us to look at, give you some pros and cons of trading that instrument, and when it's the right time to trade that instrument that you like to trade, and what are the techniques of profiting from the type of instrument that you're looking at, or some of the stuff that makes it very, very, very difficult to trade that instrument, and what are the techniques of solving that problem in the market, you know. So yeah, those are things that I'm open for today. You can throw as many questions, as many concerns as you wish. I think I'm gonna answer them in this short time, or in this short space of time that we have. All right. So yeah, let's try and continue with our live in here. So I was still explaining here about this thing, you know, like the timing element, when to trade, which instrument should you trade at what time, and all that, you know, because the problem starts when you will jump in the market, like, you know, like when you jump in the market without proper understanding of the time. Big mistake. Don't do that. You know, don't do that. um the market's gonna show you flames. You know, the market's gonna show you flames if you're gonna try and do that. You know, the market moves based on time. Moves based on time. You know, that one is so important. You know, that one is so important than anything else in the market. Entries are not that important, you know, compared to the timing element. You know, they are not that important when it comes to um, the timing element in the market. Right. Let me show you some few stuff right here in terms of the timing element on the real price charts. I think maybe I'm gonna make use of the XAU USD, and I'm gonna make use of the scenario where uh, 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 um, um okay, I'm seeing Ellipse zone, or setup zone, Z6I, saying why did you buy NQ, why the strategy showed us to sell during the CPI day. When was the CPI day? Day before yesterday. And then I bought NQ. I was looking at NQ on that day. All right, let's attend NQ there, Mr. Celebs. All right. Don't know. All right. Let's see. When was the was it two? This is today, yesterday, and this is today. All right. During the CPI day, there. Okay, man. I didn't buy the NQ. I sold the NQ here because I think this was the day of CPI. The day of the CPI was on Tuesday. Right, this was on Tuesday. I didn't buy the NQ. Maybe you didn't see it well. It was like, what was it that was, yeah, because CPI day was on Wednesday. So sorry, Tuesday. So by that, I didn't buy the NQ. I sold the NQ. I sold the NQ there. Yeah, that's how I did it. Right here. If you were to look at it, you know, check the video. We have 15, and then we have 9. Then with this, the market opened in peak one direction there, and then try to close above them. So with this, what I did, the market opened, rose to the upside, and then somewhere there, that's when I took advantage of the market and top with it. You know, easy as that. I didn't buy the NQ. It was like buying the NQ. That means the market took me out, according to the way you are saying it. That like I bought the NQ. Maybe you are seeing a different instrument there. Yeah. Exactly, my man. The video was maybe the video was for another day, not the day before, not on not on Tuesday. But what I like about you, my man, is that you now understand how to determine the direction of the market. That's what I like. You know exactly what's going on, and you're brave enough that, man, you came up with this thing, but now why did you try and go against it now? You know, like you stood your ground. Like you didn't say like, oh, he bought the NQ in there while the strategy is saying we should be selling. You know, you didn't be like, that means we have to change. You know, no, you're like, no, I'm gonna ask this guy now why, you know, why you have to buy the NQ in that way. You know, like I didn't buy, I sold. What I like is that you now understand how to find the direction of the market. That's what makes me happy. That's what makes me happy in that way, man. Yeah, and I hope others are also getting the idea of what's going on. You know, here's the thing: the market may not give you opportunities on a daily basis. You know, that is when most people lose it. That is when most people that's where most people get it wrong. Even every trading model, you know, you won't always get the like you won't always get opportunities on a daily basis. You know, some other days the market can give you an opportunity to take a trade, but don't take it. You know, if there's just maybe one or two things that doesn't line up with what you're looking at. You know, for example, let's say the market open rise, but you are looking for a buy. So when the market does that, that doesn't mean it's going to sell. So that means if the market does that, that means that there's a problem. You know, you've got to keep out of that trade, or keep out of that scenario, that it's not a good one to take from there. It's not a good one to take from there. Yeah, so that's what's going on. On Tuesday I didn't take a buy there. Instead I took a sell from there. Right, I'm seeing a brother there saying or asking about a free Telegram there, man. Yes, there is a free Telegram, but there's a requirement there, not just in the form of money, but there's a link in the bio there, man. You need to open a trading account with the broker that I recommend, with a recommended broker, funded account, and then you're in. You know, and then you're in. Then you can let me know that, man, I've done all of stuff, and then I'm gonna put you on. That's how you will be. That's how you will have access to the free group. You know, getting all the benefits. How to trade XAU USD, Euro USD, GBP USD, all other instruments that are not listed on these parts on my videos there. You know, so yeah, that's what's going on. All right. So I'm seeing Mr. Simpio Zuma there asking about the average daily range. Now, here's the thing. Most people have been asking about the average daily range. Average daily range shouldn't be a concern that much. You know, almost in all videos that I make, that I post there, like people make make the average daily range looks like it is one major thing that is so important. You know, others they call it, they even say the ADR strategy. No, it's not an ADR strategy and all that. You know, that's what that first place when I learned about volume in the market, because when I learned about the volume in the market, average daily range, I thought that's it. You know, I thought it's some kind of a strategy. That means when the market has achieved it or reached it, ain't no way that the market will continue. It is 100% guaranteed that it won't continue. ADR guides you not to continue from the market that is done moving in the direction. For example, let's say we have now let's say we have the market that has been going up ever since they started from here. So as you know that like the way we are looking at it, we have two places. We've got 9 down there, and then we've got 15 right here, which is 3. That is how we analyze the market. That's the window that we are looking at. Now, when we have this part, this is the NQ that you are looking at right there, and the ADR is 1.2%. And here the market has reached the ADR. So according to this, if the market open peak one direction, it means at the right time I'm expect to see the market open drop, then around 15 to 18, then we want to see the market, and then the market opened and gone all the way up to the upside right there. That's what we expect to see according to the general standard or the standard form of this thing. But when the market has achieved or then the market has achieved the ADR, then from there, that means chances of the market to continue are now slim, are now like slim, like 10% chances that the market can still continue to the upside from there. Two things will happen when the market has achieved or reached an ADR. The market will either consolidate, or maybe the market will simply reverse all the way back down. So those two things are what are almost guaranteed that is going to happen in this case. Now, so you can't say when the market is achieved or reach an ADR, you can expect to sell right there, because the market can still just consolidate. When the market has done that, then you're going to face a problem in that case. So it's so important that like what you do when the market has achieved an ADR, you simply don't continue with the same direction. You don't continue with the same direction. Let the market run and look for another clear scenario. Look for another clear scenario, and then you're good to go. And then you're good to go, and all that. Easy as that. So the average daily range changes over time. It changes over time. I can't tell the maximum. I can't tell the maximum. As Pro is asking there, what's the maximum drawdown there, or like what's the maximum ADR for the NQ and USDT? I can't tell. We always find out in a day, when it starts of the day, if like what's going on. You find out at the start of the day the ADR that you're going to work with and all that. So yeah, that's it about the ADR and all that. So yeah, okay, another question right there. Find how much there you can find with any amount of money there that you're going to trade with. That you are going to trade with. You know how much you want to trade with. You know how much you want to trade with. And I'm seeing Pro right there recommending a 500 trend. Yeah, if that's what you are comfortable around trading with, yeah, that's perfect. You can also find anything, any amount of money that you want to trade with, that you're going to trade with there. So yeah, and then I'm seeing Pro that right there talking about today's trade on the NAS 100. Can you explain? Right, now let us look at the NQ and versus the NAS 100. No, NQ is the NAS 100. So let's look at the NAS 100 and the USD, because when you are looking at the market, when you're trading in the market about those two instruments, these two instruments, they are complementary, like not exactly complementary, they correlate a lot, especially at the right time. At some point, 5 minutes from the New York Open, they oppose each other. 5 minutes from the New York Open, they oppose each other. 5 minutes. After that, then they will start to move in the same direction. After that, they will start to move in the same direction. So that means these two instruments, they correlate. They, most of the time, almost 80% of the time, at the right time, they are most likely going to move in the same direction. Now, there's a brother right there who is Finos, who was in the class today on Zoom cloud meeting with the members of the Arab team on the message program. So what we found there was the NAS 100 and US 30, the overall direction of them, they are opposing each other. 5 minutes, there's only 5 minutes on the chart where we allow these two instruments to move in the opposite direction. But ever since they started, these two have been opposing each other. Let's look at it. Here, NAS 100 opened have been going down. And then the US 30, what it has been doing, okay, excuse my network, don't know what it does, what's going on around it. And then what happened on the side was the US 30 has been going up. That's a big red flag, or that's the first red flag in the market. That is the first red flag, from there. So when you are facing with those scenarios, one of those instruments is going to misbehave, and then one of them is going to behave well, So two things happens from there. It's either the other one is going to misbehave or the other one will behave. Or it's going to be an in and out mission, your trades, or the way you enter into the market. It's going to be an in and out, and then you're done. You're not going to hold position for so long right there because they are opposing each other. So at some point, they will have to move in the same direction. So that when they move in the same direction, whereas their market condition doesn't match, it means one of them is going to take a loss, or one of them is going to misbehave. As it happened today, what we have right here, we had US 30 opened, pick one direction, with an intentions of continuing to the upside. Therefore, want to see the market retrace, giving us an entry rise. Perfect. This was clean. Now, when you are now looking at the US NAS 100, it was a different story. There, let me show it to you. Okay, excuse my network. It's kind of slow. It's a bit late now. So then now this is what you have on the NAS 100. NAS 100. Instead of the NAS 100 to open and pick one direction to go up in the same way as the US 30. No, this thing chose to drop. So when it dropped in this way, some of us were waiting for it to give us the opposite direction, then drop. It dropped half. Then after that, they both move in the same direction, which is exactly what I told you in the first place. They have to move they have to oppose each other at first place. Then after that, they will be allowed to move in the same direction. So that means while this one here was rising, the US 30 on the side was dropping. Then now after 5 minutes, then they started to move in the same direction. That is why you saw even this one going all the way to the upside. So therefore, this one was going to be, if you entered somewhere there, you're going to get small profit. But if you try to hold, then you're going to get a smoke. The market is going to smoke you. Easy as that. So yeah, that's the thing about the market for today. So what I can say is that the market condition for today for these two instruments was a problem. It was a problem. So by that, you didn't do anything. If you found a sell on the NAS 100, you didn't do anything wrong. And if you found a buy on the US 30, you didn't do anything wrong. You made a profit. So it was the case of the market today being indecisive in terms of the way it gave us opportunities. It gave us opportunities. One was clear and then the one was wrong. So it was going to be a break even if you took both opportunities in there. If you took both opportunities in there, then it was going to be a break even in that case. So yeah, I think that's it for today. I think we'll meet tomorrow to cover some other stuff. Tomorrow I think we'll be doing a weekly analysis, like a weekly